Hello, hello, hello. Happy, wonderful Wednesday already. How is everybody doing? Good morning, Patrick. Thank you for putting in the news. Sterling, good morning. Good morning. Yeah, PPI is hotter. Oh, you really think the clown show is gonna have a speaker by the end of the day? Oh, I'd be shocked. I would be shocked. Good morning, Options 22. Good morning, Jacob. Again, I hope everyone is having a wonderful day so far. If you didn't read in the chat what Sterling was putting in, PPI coming in hotter. We'll go through that. Good morning, Christoph. Again, thank you for everybody for being here. Uh, let's see. Mortgage information out earlier. The rates higher. Not shocked there. PPI better than last month, but the headline number month over month was expected to be about 0.3 to 0.4, coming in at 0.5. Core coming in hotter than the 0.2. Year over year, still running 2.7, expected around 2.2 to 2.3. Uh, Food and energy month over month coming in pretty much in line. Year over year coming in expected to be 1.7, 1.6, so definitely below that 2%, but coming in at 2.2. But the market so far has pretty much shrugged it off. We have Waller speaking. We got Bostic speaking. We have the FOMC minutes from the last month's meeting. So from September's meeting, we get the minutes released today to see if there's any other tidbits in there. Other than that, that is about it for today. And remember, we have CPI tomorrow. So far, got Lily up pretty strong, and a decent sort of base formed in the mega caps this morning. Oil is pulling back. Excuse me. The futures looking to potentially fill the gap. Groups, everything except energy is positive. So with consumer cyclical leading the way, Fed Watch tool, still nothing, no real signs of any projected hike on the table, and the first cut being in the June meeting next year. Fear and greed still in the middle of fear mode. Excuse me. Earnings, there was nothing this morning, nothing really this afternoon. Excuse me one second. My throat's a little dry. Tomorrow we got Delta, Walgreens Boots. And then Friday really kicks off earnings seasons. By the way, we're back to non-back adjusted charts if you notice the difference because of where we are with some key levels. Yesterday, bouncing off the 50 on the non-back adjusted. Key level on the non-back adjusted for a close now is 44.42. We're still getting into some pretty key resistance areas right up here. We already surpassed on the non-back adjusted the base here, but now we're getting into some key areas right in here. But the 44.42 will be key to continue the push higher. Hold on one second. There we go. Had to hit the cough button. All right. I am starting to watch, though, in toppy territory. We might be setting up a little flat base double going into the open on the 4-hour chart. It needs to push a little higher. Technically, it has to get above 44.1125. I'll be watching for that. That doesn't mean it has to trigger, but that would also be into, if it did trigger, be into the 4-hour rotation zone. Why am I watching for a topping pattern? Because we are getting into cycle topping area. We still, in the bigger picture, have weekly cycles pushing up, which is fine. I mean, from the bigger picture, this topping area, I'd watch for a more possibly a shallower pullback, a sideways to shallower pullback. So we'll be keeping an eye on that, especially with the CPI and earnings kicking off on Friday. But if we start taking out, yesterday hit the 50 EMA. If we start taking out that, really my next key target is 44.42. We close above that, 44.83. and that's with the descending. Oh, I got to fix that line. Hold on. That's incorrect. There we go. Then we got about 44.83, and then the next key area would be 45.25, roughly there. So, but this is going to be a pretty significant closing area that has to get through. On a pullback basis, I'm watching, I already showed you. If we start triggering, if this turns into a double, we start triggering that. I'm watching for a potential pullback. Let me change this level. Where is that? Where'd my line go? I'll just put a new line in. Watching for a potential pullback, even without using a double target, to about 43.67 area. Bottom of the 4-hour rotation zone. Where does that put us on the daily? Puts us back, you can see, a pretty key support area. So we'll have to judge if we do roll over down to there in the next couple of days. We'll have to see how well that holds up. How are we doing? Good morning, Martinez. Good morning, Royal Palms. Fun fact from the car business right now. A record 17.5% of buyers purchasing a new car in third quarter are paying more than $1,000 a month for their vehicles. Wow. Wow. Good morning, Jake. So, that is a fun fact. I wonder what percentage is over like 750, because that's got to be, I mean, cars are expensive now. Interesting enough, with the NASDAQ did not close above the 62.5, got rejected today. If this holds up, it might close above the 62.5. Again, I'm focusing on this little low price action. The NASDAQ, in order to get to the, and this is not a well-formed double, but I'll be paying attention to it, about 15,353 on the push up. And then if we roll over, it's not really well-formed. It's because of the extended flat bottom. But, again, let me just make sure I have those levels again. 15,351, 50s, the technical level right there. That would put it in double territory. Other than that, 15,292.50 on the closing basis. The pullback area now. The pullback area, if we do get these more significant pullback, is coming in about 15,150. Besides using those potential double targets. On a push higher, especially if we close above the 62.5, the next key areas are 15,430, then 15,573. Those are the next key targets. And right around here, we have the descending channel upper line, and we do have some fair amount of resistance from mid-September. The Dow. Next key areas, I'll just go through these quickly. 34,185 to 34,200, then 34,320. The pullback level is coming in at about 33,750. So that's really all we have to focus on with that. The Russell finished its little double yesterday. The little doubles stalled out at the rotation zone. If we make them push higher, the next minor area for the Russell is right about 1812, and then we got 1827. If it continues above there, it's interesting on the non-back adjusted chart, which is 1854. You got the flat 200, which was major support, becoming major resistance right at that intermediate 62.5% level. So very key if the NASDAQ keeps going. The Russell keeps going, but it's got some heavy lifting to get through some of these key resistance areas. Pullback support's now 1775. VIXI, well below that 18 level. Gonna watch in terms of if it keeps getting down below 16 now. 16 is my next key level I am paying attention to. For if we break below that, then it should be rally continues. Remember, weekly cycles are still at the bottom, so on any pause or pullback, you still have the major cycle still moving up. We'll get to notes real quick. DAX. DAX actually surprisingly a little stronger. Next key area 15,610 and then 15,745. Right in here we have major resistance between that 1562.5. We have the 200. We have the declining 50, and we have some prior major support. So I'm going to be watching with cycles at the top coming into a topping area on the DAX. The notes hit the second target. The note futures, not the micro yields, then hit the second target and have not been able to sustain a move above the rotation zone. But first and second target hit. Final target 108.18 and a half. Sterling closed his 10-year yield short initiated because I lost conviction in double top due to the bond market being closed on Monday. Okay, well, there you go. It's officially hit the first and the second target and bouncing off the rotation zone so far. So the first and second targets have been hit on that. If you have left my original stops in place without stopping out, I share this as a reminder to let you know you're trading and trust yourself. Yeah, you don't know which ones are going to work. You don't know. You don't know. Watch if you're overruling. That's why I suggest setting up your targets and your stops before you even put on a trade. Because if you keep futzing with them, that's the best time to do anything, because then you have it in place. You lay out the trade ahead of time. That's why I know mechanically, like when we hit, and you can modify it however you want, but my mechanicals are you hit the first stop level, the stop comes down, I already know where that worst case stop is. And you can do it as mechanically as you can get to. Then from a psychological standpoint, find out if you're overruling stuff. And if the overruling stuff is having a bad effect long term on your portfolio, you either got to learn to stick with the rules or make the rules fit your trading style better. So that's a good lesson, Sterling. What's the probability of a flat bottom double top triggering? Well, we don't, unless we've pushed up to that area. What do you mean? What's the probability of it triggering? The probabilities are, I don't even know if this has been pushed up. Are you asking the probabilities of it triggering or the probabilities if it does trigger? Those are two very different questions. Because a flat bottom take off about 5 percentage points. I think it's 5 to 7 if I remember correctly. So, because of the extended flat bottom. But, and you see here, you can see here it's going into some pretty key support area. Now, I keep forgetting that. I keep taking this off too early. It's not even in double top territory yet. So, if you did break below here, and it was not in double top territory, the probabilities wouldn't matter, and I'd just be watching it coming into this extended support base. What else do we have? We already went through the yields. The 10-2s, come on. The 10-2s, bear steeping a stop for the time being, coming back into some pretty key support. Dollar index continues its pullback again on any bounce. We have daily cycles getting to the bottom, but weekly still rolling over. So this is the inverse of like the S&P and the NASDAQ. So on any bounce in here, it's going to be more of a choppy to possibly smaller bounce. The only thing that gets me bullish, again, in the short term is if we get a close above 106.30. Other than that, I'll watch for another rollover play just because of where the cycles are. Crude, still holding on the non-back adjusted charts, the 50. If we do break below this, I'm watching for the gap fill. The gap fill, especially with cycles getting to the topping area. So far, they've been climbing, and it's pretty much moved sideways. Natty gas, watching for this pullback move now. The pullback move in natty gas, I got to sort of minorly change these levels a bit. Just a hair. There we go. About 317 right now. Let's see. You said it was lower. Yes. It's about go to 5 to 7 points. It depends on the market, but that's where it sits. Doesn't it's still well above 50% though. So that's a great level if you've been long to possibly lock in some more long profits if it would turn into a double end trigger. But remember, these little mini double tops are just for minor pullbacks. Gold up against the rotation zone. Up against the rotation zone right now. Watching for this to get to a top area, but there's no topping pattern yet. Let's get to some other things. Yen still holding the rotation zone, but nothing yet going on there. Euro starting to run up a bit, going into very key resistance area about 106.45, 106.50. We're going to start watching for a minor pullback in the euro and the pound, just like a minor short-term bottom in the dollar. And then we could see still some extended runs higher on the pound, the euro. So keep that in mind. Bitcoin, still garbage. Let's get to those spiders and the Qs. Spiders and the Qs. Spiders hitting the first target and the 50 EMA yesterday. Okay, you can watch, short term. That's why I like to watch the futures. You could see if this comes up, and forms on the 1 hour chart. This will be a better formed potential double with the gap. It would have to get to, if you're trying to do the spiders, get above 436.49 to get into double territory. If that were to push up there and then stall out somewhere around here, and then you got the close back below 430.31, that would be a well-formed double. A well-formed double. Now, remember, we have a bigger double bottom. Would that invalidate it? Let's just pretend. Let's do a little Mr. Rogers pretend thing. Look, I'm just using, and I'd use the right side targets, by the way. We just don't know where they'd be. But even if you use the left side, look, that just takes it potentially back to the trigger point. So that wouldn't invalidate the second and third targets. Just keep that in mind. So again, you could get a minor pullback with cycles at the top and still not invalidate the bigger double bottom that's already hit the first target, which is the stop raise now. And the stop raise would be, which would not be changed, the farthest away stop is to invalidate the pattern is 426.58. And you remember that first target for the double was around 431.60. Nowhere near that, not even to the 50% retracement of this move. So that's where you got to... Now, could it top out and then plummet? Yeah, anything could happen. That's why you still manage your stops, but you still have probabilities still more to the upside. So that's why I wouldn't panic out. This is why it's also stop raise. Or you could say, hey, depending on if you front run this pattern or something else, if it triggers, I take off a little bit. Maybe if it hits the targets, I put some back on, trade it around a position. The Qs, if you're watching for the double in the Qs, potential double, because it might never form, or it might keep rallying and invalidate it because it can go too far to the upside, would be 370.51 would be your level. Right now, 369.79 going into the open. The Qs have the flatter bottom. Now, the Qs have also hit the first and second target. So the final target, 372.63. 372.63, and that little double wouldn't even take it back to... I don't even think it would take it back if this does form. Let's just see. If that does form, where does that take it? Look, it doesn't even take it to the original trigger point. It just takes it back to the 50 EMA. So there you go. So my dollar index is a bunch of long wicks. On the daily, are you talking these? There's nothing abnormal on my charts with that or my other trading platform. ANF. ANF at, I don't know, it has been on a tear. It has been on a tear. Abercrombie Fitch. And what else? THO. Yeah, you do have THO's set up nicely. Daily potential double bottom right at the 200. It does have a potential daily double bottom. Fairway off still from triggering, but that is something to watch for. Thanks for pointing that out. Yours is way different from Thinkorswim. I've not opened up my Thinkorswim yet today, but my stuff in my other charting package looks like this one. Looks like this one. I mean, I don't know. You might have some misprints in there, but these are standard wicks. I'll get to Tesla, PMG. Remember, earnings a week from today. Still no close above the 266. What's the exact area? 266.69. Above there, then I would only use the short-term targets, 277.56. And you still have a gap left behind. It would be interesting to see if this can get a run on, but it's, you know, just be a little cautious to that. If it can break above the 266, we'll just call it 266.70, then I would really watch for the 277.50 area. The breakdown area, the short term, as long as it holds 251, you're fine from the bullish side. If you start breaking below that, we're back to 245 and then about 235. So that's where that sits. I got to wrap this up again. Coming in soon. Coming in, still dealing with stuff this week. Let me just see something real quick. Yeah, it looks like I got to go take care of some stuff. No little potential double on NVIDIA. And NVIDIA's still in the rollover zone. So if we get some of these mega caps rolling over, we could start getting that short-term pullback. I will keep an eye on that too. I got to wrap it up for today. I'll be back normal time tomorrow. Still will be coming on right around that 8 a.m. So pay attention to that. And I will remember CPI tomorrow. And with that, I'll talk to everyone later. Bye for now.